Good morning, everyone, and welcome back to Morning Markets. Start of the new week, Monday, the 20th of July. A couple of things that I found interesting over the weekend and thinking about the week ahead that I wanted to share with you. The first of which was just looking at a little bit of the performance of equity markets last week, and in particular, just how growth equities performed relative to the broader market. Now, we touched on a little bit of this last week when we discussed the NASDAQ underperforming some of the broader indices in the US. And indeed, that was sort of the theme for the week, with technology and growth-related equities underperforming the broader market. That'll be something that we'll continue to observe as a trend this week, because we will get a number of the US technology companies reporting. And that'll give us an indication both as to how their business models have fared through the second quarter and the impact of COVID-19, but then also how the market reacts to the results and to the guidance that these companies give. We discussed on Friday the impact that Netflix had in terms of the share price performance post its results, when it indicated that its growth in the coming quarters would be below that which had been expected. Other things that are interesting today, particularly in Europe around the EU leaders. Discussions are ongoing with regard to the recovery fund and the structure of the recovery fund. Clearly, these talks have went on a lot longer than expected, which actually I think is a positive sign. Does indicate that the European leaders are trying to at least move this forward and bring it to a conclusion. What seems to be the stumbling block, it seems to be the mix within the 750 billion euros between that which is grant aid versus that which is loans. So that sticking point seems to be primarily with the frugal four, as they're affectionately known: Sweden, Austria, Netherlands and Denmark. Does seem, however, that we are maybe inching towards getting a conclusion to this, with some indications this morning that the frugal four are willing to accept a mix which would see the grants at some 350 to 400 billion euros. So if that can be completed today, I think that would be a positive. Or if the European leaders set out an agenda for future discussion and a timeline for that, I think that will be positive as well. I think it's just interesting today to just look at how the euro has performed. Yes, the euro has been one of the stronger currencies, particularly against a peer basket, but also against the dollar in recent weeks. Currency is relatively stable today, so maybe the market wasn't expecting too much to come from the discussion after all, and we may see more support for the euro and support for European assets should an agreement be reached. Looking at the week ahead, as I've already mentioned, we will continue to get company results for the second quarter and for the first half of 2020. Other things that we'll be looking at, ongoing data releases to give a sense of the opening up of economies and how consumer sentiment and consumer behaviour is recovering. So we'll get UK retail sales towards the end of the week, and in the US we will have new home sales during the course of this week. And we did see a very strong rebound in US home sales last month, so be interesting to see if that trend has continued, because one of the things that we do know is that COVID-19 cases have continued to spike across a large number of US states, and that will impact consumer sentiment and consumer confidence. And we did see an initial sign of that in the University of Michigan data that came out on Friday, where there was a decline in consumer sentiment month on month, but also the future and the expectations component of that also declined. Turning to markets this morning, relatively mixed picture in Asia. Some economic data, Japanese exports for the month of June declined about 26% year on year, slightly worse than had been forecast, and it just goes to show the damage that has been wrought on the Japanese economy as a result of COVID-19, where the importance of exports has really been is crucial to the economy, but they're really not recovering as of yet. We've seen the Chinese equity market slightly stronger today. that seems to be in the back of a report that local insurance companies will be able to own more equity than they have in the past. I think over the long term, that's a good thing. It brings more long-term investors into the Chinese equity market, which is dominated at this point in time by the retail investors. Some 70% of volume in the Chinese equity market is retail. That's it for today. Please continue to follow the morning markets videos on YouTube, and please do like them and send your comments through on topics that you would like to see us discuss. Many thanks. Bye.